For the rest of you, here's Street Signs now with Aaron Burnett.
Hello and welcome to Street Signs. I'm Aaron Burnett. We're here with you. Here's our Thursday rundown. Stocks are lower, and we talked to a strategist who says there's more red to come in 2007, and our series of the best continues. These are fund managers who've beaten the market for 8 years running, a rarefied group, and today's stock star is buying some names you might never have heard of, the top stock dog, as we're calling him. And then one of today's biggest movers is Benihana. We're not kidding, and we have the man who's causing the surge. But first, the stock option saga at Apple and Steve Jobs. We have the Apple story covered for you today. Scott Wapner is watching the stock from the NASDAQ. Jonathan Hoops from Think Equity will tell us what investors should do. And Julia Borston will look at what it all means for the man whose name is synonymous with that company, Steve Jobs. Let's begin, though, with Scott and the stock. And what have you seen today, Scott?
Aaron, thanks so much. Apple is trading off of its lows of the day, but nonetheless, I mean, it's still a down story for Apple today. Shares down 1.7%. The real critical number to watch today is right here, this $80.13, because Apple has not closed below the $80 level since early November, right about the time where this backdating situation really started to pick up steam. Remember, it was in October where we found out that Steve Jobs did, in fact, know about some of the backdating, but there was no misconduct. Right after that is when we saw some of those gains that Apple has enjoyed for much of the year start to pair off a little bit. Remember, watch that $80 level. I certainly will be, as we have 2 hours left in the trading day. Why are we talking about this today? It's right here, folks. Headline in the Financial Times, Jobs stock options not approved by board. This is the latest headline to be a hit for Apple. Essentially, they're reporting that Steve Jobs received 7.5 million stock options in 2001 without the required approval of Apple's board. The paper also goes on to say that records showing a full board meeting had taken place to approve those options were falsified. Records showing that that board meeting took place were in fact falsified, according to the Financial Times. Now, those records now among the evidence being considered by the Securities and Exchange Commission as it considers whether to file criminal charges in this case. And I should also say that the grants we are talking about were later rescinded. In terms of what Apple is saying, not much. Here's what we have from Steve Dowling, a spokesman from Apple. We're providing all details to the SEC and are not commenting any further. That's as much as we could get out of Apple regarding this situation. In terms of what the stock has been doing, I said at the top of this report that it was back in October where this really started to come of light. And you will see from this 1 month chart or so what these shares have done over the past month or so. Still expected to be a pretty good year for Apple. Shares up about 15% right now. Wall Street making some comments today as well because they do believe that Steve Jobs will be cleared of any wrongdoing in the end. Amtech, for one, says this is a good time to get in on this stock, to buy on the dips, believes the stock can now go to 99. Also, Piper's Gene Munster has been on CNBC earlier in the day, was making comments as well. He also thinks that Steve Jobs will be cleared of any wrongdoing. He's still very high on Apple and the stock's potentials. I'm going to send it back to you, Aaron, as we do one more check. $80.17 is where Apple sits right now. That is a loss of a little more than 1.5%. Aaron.
All right, Scott, thank you very much. There's been several down days, Scott, going through the saga here of the shock option scandal at Apple, as we've been calling it. The question is, should these developments cause you to sell or buy the stock? Now, Scott talked about a couple of analysts and their points of view. Right now, we're joined by Jonathan Hoops, technology analyst in Think Equity Partners. And it is safe to say, Jonathan, you are a bull to the tune of $110 price target, or nearly 40% upside from here.
Yeah, that's correct. We set that price target when the stock was in the low 90s.
So here's my question. All of these revelations that are coming out, and obviously a lot of uncertainty as to what really went on, but you have held firm to your target throughout. Are you worried? Are you considering changing your view?
Not unless I find out that Steve or others who are currently at the company were in fact associated with misconduct. I go back to the October 4th update, the press release put out by Apple Computer, where they said that in the key findings of their own internal investigation that there was no misconduct by current employees of the company. And if in fact that's the case, I think Steve is there to stay.
So you believe right now that Steve Jobs is going to survive? I mean, because it's possible, Jonathan, isn't it, that even if he didn't do anything wrong, that there is a taint here on his credibility, on his reputation, a taint perhaps to the extent that he chooses to leave?
Well, I don't expect Steve to be choosing to leave this firm anytime soon. If that were the case, I expect we would have seen more by way of succession planning, or at least a message delivered to investors and others alike that perhaps there was someone getting ready to take over his spot. I don't see him leaving. Taint, yeah, he actually did come out and make an apology on that same October 4th time period.
He did.
He did make the apology.
He certainly did. And I know he seemed very upset about the whole situation then. So I guess we will leave it there, Jonathan. Thank you very much. And you heard Jonathan, folks, if you're looking at what to do you sell into the sell-off here or buy? Clearly, right there, a very firm buy. He says he thinks it's going to 110. Now, when we talk about Apple, it is safe to say that few companies in the country are as closely associated with one person as Apple is to Steve Jobs. With Bill Gates easing out of his day-to-day responsibilities at Microsoft, Steve Jobs is the last of the great tech visionaries still running the company that he created, coming up with products that get people excited. Just think about the iPod. Can Jobs and Apple survive this latest crisis? Let's talk about the man, Steve Jobs, personally. Julia Borson has that story. Julia?
Aaron, Steve Jobs personally introduces every single one of Apple's new products, and his image is really that of the creative force behind every new gadget.
Steve Jobs is Apple, Apple is Steve Jobs. So that's why the ground shook, and that's why even in the indications this morning, this stock will hang precipitously now until this is figured out.
Worth about $5 billion, 51-year-old Jobs has a reputation for micromanaging, being tough on employees, and focusing on his own compensation.
He's one of the CEOs that identified a few years ago that has a certain behavior pattern that indicates a high focus on his own monetary compensation, indicating that a problem like this was likely to occur.
Jobs has revolutionized the music business, but his reluctance to pick a creative successor, even when he had cancer a few years ago, could endanger Apple's longevity.
There would certainly be elements of the culture that would be preserved, for example, the secrecy. But I can see other elements of it beginning to fall apart fairly quickly, and I think the company would be in serious trouble without him.
Steve Jobs also reflects on Disney. He's the media giant's largest shareholder, and he holds a seat on the board, having founded digital animation studio Pixar, which he sold to Disney for $7.4 billion in May. There's no question that Jobs makes the hottest gadgets out there, and that this year he'll certainly change the game again with the iPhone and iTV, which allows you to beam digital downloads from computer to TV. And the question is now, Aaron, whether the scandal can pull him out of the game.
And that certainly is the big question, and we'll continue to watch Apple shares in reaction to that. Thanks so much to Julia Borson. And now we turn from Jobs to Jobs reports from Apple, to overturning the apple cart of economic common wisdom with the latest batch of news. Steve Leisman is here with a wonderful play on words, left and right and center. Here you are.
Oh, thank you, Aaron. It's almost New Year's, and time to start thinking about fresh starts. The latest batch of economic reports suggests time to think anew about the economic slowdown and whether it will be more shallow than prior predictions. All three reports out this morning, Chicago manufacturing reports, existing home sales, and consumer confidence, came in above market expectations and showed some strength. These are all, not the top tier. They're not jobs reports, so to speak, but they're all, so you don't want to really exaggerate the significance on the outlook, but they all could be providing important clues here. Existing home sales in November rising slightly to 6.2 million units. Economists had expected a decline. The median price dipped just a bit to 218,000. Inventory is still high at 7.3 months. Significance of the number, not in the game though. It's the appearance that housing has stabilized right around this level at 6.2 million units. This confirms yesterday's new home sales data, also showing a leveling off in the decline. Together with a reasonable consumer spending, a better housing market is now buoying the outlook for growth.
In the fourth quarter of this year, consumer spending is growing at better than 4% in real dollar terms in the fourth quarter. And there's no sign, in my opinion, of that spillover effect from the housing market to the consumer.
Consumer confidence, another upbeat part of the outlook from today, with the number surpassing the forecast with 109. That's the best showing since April. There were big jumps in how people feel about the present situation and their assessments of the future. Consumers also upbeat on jobs prospect. Hard to imagine such a weak Christmas shopping season if consumers were so optimistic. Consumers were more confident this December than they were a year ago. But estimates so far are that holiday spending is running a couple percentage points below 2005. Meanwhile, Chicago Manufacturing Index also strengthened above 50 at 52, at odds with the deep decline registered last week in the Philly Fed's index. So stronger growth could be the new thing for 07, while Covey economists say the consumer confidence data make talk of recession seem so passé.
I like that. You mentioned something in there, talking about the potential stabilization of the residential housing market. Right. You know, we've been talking over the past few months about the thing that has been providing strength to the construction spending and to the economy has been commercial construction. What are we seeing there? Is that still holding up as strong?
We've seen very strong growth in that sector of the economy, and what's interesting about it is the way it has the ability to alleviate some of the pain in residential. If you think about, for example, the jobs market, a guy who makes bathrooms in a residential building can also make them in a commercial building. Some of the contractors will find work there. Look, the residential building market is bigger than the commercial market, so it's not going to take up for it one for one, but it will alleviate some of the pain. There's been a lot of liquidity in that area. You've seen the REITs take off really astonishingly this year. Sam Zell selling his property. Some of the cap rates have come way down, and they're talking about much lower returns and hoping to make money on the back end. A lot of liquidity has really helped pump up that sector of the economy.
All right. Well, thanks very much, Steve. And I asked because we're going to be joined by the CEO of Cushman & Wakefield, one of the largest commercial construction companies in the country. We're going to talk to him about what he's seeing later on today on Street Signs. Up next, though, can the big cat bull run keep running into 07? Next, we have a bull and bear cat fight. And then another fund manager who's beaten the S&P for 8 years running. Find out where he's putting his money now. Street Signs will come back right here on CNBC, first in business worldwide.
Today, big jobs, big money. Who really decides how much top executives get paid? One of the world's largest corporations lifts the veil on the mystery. Closing bell today, 4 Eastern.
Look at me, I'm in a size 2. I finally did something. I called Nutrisystem, and I lost 33 pounds.
Get real results with Nutrisystem Nourish, the easy weight loss program that lets you eat great and lose weight.
It's simple. I just eat the food. It worked. This is it too.
Call or go online now to get 4 weeks of delicious meals and lose weight. Plus, you'll get an extra week of Nutrisystem meals free.
This is the first time that I could put on a swimsuit and not be self-conscious.
Our secret is the breakthrough science of the glycemic index that separates good carbs from bad.
I'm a chocoholic, and this plan lets me eat chocolate every day.
Nutrisystem delivers every meal to your door, and shipping is free.
I feel so sexy.
For about $10 a day, you'll enjoy 4 weeks of perfectly portioned meals.
Trust me, you will lose weight.
Get our 4-week program and we'll send you an extra 7 breakfasts, 7 lunches, 7 dinners, and 7 desserts. A full week of food absolutely free. Call now.
NBC News. We were there as history happened around the world.
It was a clean sweep for the Democrats.
Death by hanging.
North Korea has defied the will of the international community.
We are in Haifa. The air raid sirens have just sounded.
We were there for you in 2006.
Al-Zarqawi was killed in
Some 400,000 people took to the streets.
He quit almost immediately.
The news dropped like a bombshell.
And we'll be there in 2007. NBC News, America's news leader.
Imagine a rock-solid retirement. This could be your rock-solid morning commute. This could be your rock-solid corner office. Your rock-solid water cooler. Office supplies. Your rock-solid coffee break. And out-of-town meeting. What's your idea of a rock-solid retirement? Let Prudential be your rock for retirement.
I like helping my parents out, but it's not easy. Like helping them find a Medicare drug plan. I made all these phone calls, and I get this recording most of the time. Now the deadline's coming up, and is it asking too much to speak to a human being?
Not at all. Call Aetna Medicare at 1-888-4ANSWER. You can talk to a representative and even enroll over the phone. Or enroll online at AetnaPartD.com. We want you to know Aetna Medicare.
What do Corrections Corp, Allegheny Technology, and Foster Wheeler have in common? Well, all 3 of them mean something special to our top stock dog, one of the rare fund managers to beat the market 8 years running. That's coming up in about 6 minutes here on Street Signs. Now, today is a slightly down day for the markets, but There's nothing to be ashamed of from the major indices for 2007. Let's just show you the numbers. You looking here at the year to date. We've got the Dow Jones Industrial Average up 17%, NASDAQ up 10%, S&P 500 is up 14%. That's really nothing shabby, especially when you look at the Dow. But, you know, we've only got one day left for 06, so let's talk about the future. What's in store in 2007? Kim Goodwin is head of equities for Credit Suisse's asset management. She sees a lot of opportunities. And John Bollinger is president of Bollinger Capital Management. He joins us as well. Kim and John, thanks for joining us. And Kim, I want to start with you because, well, okay, I guess you're a little bit of a wet blanket, but, you know, that's nothing wrong with that. You're saying we're going to be down next year.
Yeah, I think, Aaron, that it's not going to be anything dramatic. Quite frankly, my number for the Dow is 11,985. That's down maybe 4%, and I think that the bull market's going to take a breather for now.
Why?
Well, basically, if you look at S&P 500 earnings, one of the reasons that the markets did so well this year is because earnings were well ahead of expectations. But my S&P number for next year is 6%, so that's a deceleration. So that's one of the factors. I'm also concerned about housing, and I'm concerned about oil prices. And the weaker dollar is certainly a wild card in all of this.
All right. What do you think, John? What's your response? She just gave her fearless forecast, as we're calling it, and I believe that you don't agree.
Well, first of all, I'm not much of a forecaster. I prefer to go with things as they actually play out. But I think that the good roadmap going forward probably looks positive for the first 6 months of the year, and then more questionable for the last half of the year. So, in fact, we could be in agreement essentially, because after a trip higher, we could end up lower on the year.
We could give it all back. So 2 wet blankets.
We could indeed. We could indeed. But we have very good
John,
liquidity in the.
Sorry, John, what's your biggest worry? I mean, are your worries the same worries that Kim has, oil, housing, and a slowdown in earnings growth?
No, actually, I think earnings growth is going to come in better than expected pretty consistently. One of the reasons is that people like Kim are cutting back their forecasts as dramatically as they are. I think it's going to be pretty easy for those companies to beat those reduced expectations. If you look back over the past couple of years, the name of the game has been on virtually every report is that we've done better than expectations, including the 3 reports that came out this morning. So I think that trend will continue into the first half of next year and support stock prices.
John, when you look from the technical perspective, which is where you focus, is there any sector that you see perhaps outperforming, especially when you say, taking an aggregate, your market view, we could end down overall for 07?
Well, I think that the interesting sectors right now are probably basic materials, energy, industry. I think those sectors are liable to do very well in the immediate future. For instance, I keep a commodity composite index, and that has just made a new high. This despite the slowdown in housing and the reduction in oil prices. So commodity prices are doing very well indeed, and I think that that's going to be reflected in very strong performance from the basic material stocks.
Now, Kim, if I'm correct, I believe that you don't quite see the world the same way when it comes to sectors, that you actually would put your bets on one of the sectors that has done the best this year, telecom. It does look like we have a little bit of a... Oh, there we go. Kim, could you start your answer again? I'm sorry, I believe your audio cut out.
Sure. Okay, no problem. I do think that telecoms do have this opportunity to continue to outperform into 2007. First of all, if you buy my thesis, which is that the markets could be flat to down, then telecoms are defensive. The other piece is that they're continuing to see higher cash flows, pricing power, and the restructuring element is still making them fairly exciting. So within the U.S., telecoms would be one place to be. But Aaron, as you know, I'm much more constructive about opportunities outside of the U.S. and some of the emerging markets.
And in fact, Kim, while you're calling for the U.S. markets to be flat to down, you believe we could see double-digit percentage growth outside the U.S. yet again?
Definitely, because as you look at, say, Eastern Europe, particularly Russia, and as you look at Asia outside of Japan, particularly China, there are great opportunities for at least double-digit returns. So regardless of whether you think the U.S. market's going to be flat or down 4%, double-digit returns outside of the U.S. in some of these markets would be fantastic opportunities for your viewers.
John, what's the take? What's your take there?
Oh, I think we have a substantial commitment to overseas equities. 25% of our portfolio now. We plan to maintain that through next year. I think international investing is a very important theme now. And frankly, I also agree about telecom. Telecom's done very well this year, and I see no sign of that trend reversing. It's leadership coming into the new year, and I think that people actually, in a new year where there's a lot of confusion as we get started up and such like that, tend to go with the prior leaders. So I think telecom could do pretty well coming out of the box.
Well, on that note of agreement, we will leave it there. Kim and John, thanks so much to both of you. Kim, my apologies for the little bit of delay that we had. Look forward to having you on again soon.
No problem.
And just ahead on Street Signs, another of our fund managers on a roll, beating the S&P for 8 years by buying a few names you may never have heard of. We will share them with you. And 06, a roller coaster ride for oil. Our guest is making a firm bet with his clients' money, and he'll tell you which way to go on crude. Those stories still to come on Street Signs today.
I'm Ed Rontaler. I'm 101 years old. This house was built in 1930. We've had a lot of trick-or-treaters, many happy Thanksgivings, many happy memories in this house. I wouldn't trade a single day here for anything.
Each year, mortgage insurance from Genworth Financial helps thousands of people start building their own futures today by getting into their own homes faster. Genworth Financial. Insurance for living, solutions for life.
What do you know about computers?
My daughter definitely knows how to use a computer better than I do half the time, and she's 3.5.
Hi, I'm John Scherer, CEO and founder of Video Professor. I've been hearing comments like that for over 18 years now. Listen to this.
I did the Excel, and it was a lot of fun. Really? I had a real good time. I learned a lot.
The difference, just 1 hour with one of my CDs, and they're easy to use. The CD plays like a video on your computer screen. Just follow the step-by-step instructions. And if you call right now, I'll send you any lesson of your choice free. The reason I can do this is because I know that once you try my product, you'll come back to us for all your computer learning needs. If you can't learn for any reason, I'll not only refund your shipping and processing, but I'll send you $10. So learn a new skill in less than an hour. Try my product.
I think that's the most fun I've had learning something about the computer.
To get your free computer learning CD, you must call now. Call 1-800-430-5412.
Honey, there's an article here about your poor leg circulation.
Peripheral artery disease, yeah?
I didn't realize PAD is so serious.
PAD puts you at more than double the risk of heart attack or stroke. So if you're diagnosed, it's important to make sure you're doing everything you can to reduce that risk. You see, poor circulation in the legs could mean poor circulation in the heart and brain as well. That's a risk for heart attack or stroke. So get the facts if you've been diagnosed with PAD or have pain or heaviness in the legs.
I think I need to learn more about this.
Call 1-800-433-0851 for this free information about PAD, diagnosis, and treatment options to reduce the risk of heart attack or stroke.
I'm calling that number.
PAD is news to most people. Get the story with this free information kit. Call 1-800-433-0851 or visit padupdate.com.
January, CNBC takes you where business kicks off its new year. We'll show you which automakers will steer you to profits. Who's winning the battle for your living room? Big Pharma's breakthroughs. What's next from Mac? And world leaders and activists from Davos. Complete coverage on air and online. CNBC January.
In just a few moments, we're going to be talking about one of today's biggest stock movers, and it is a surge to the upside for Benihana. Yes, it's publicly traded. Yes, it is the top pick of a certain person who will explain on Street Signs in just a few moments. If you're a fund manager, your goal is to beat the markets year in and year out every day this week. Street Signs is speaking with a manager who's done just that. In the past 8 years, only 40 funds have consistently beaten the S&P 500. AIM Capital Development Fund is in that exclusive club. It's a mid-cap growth fund that's up 17% so far this year, better than the S&P, which is up 14%. The fund manages $1.6 billion in assets. Paul Resplica is its lead portfolio manager, and he is with us now. Paul, what did you bet on right this year?
What did we bet on right? We had some good energy earlier in the year, also some ethanol participation with Archer Daniels Midland that we were able to sell in a timely way. And then aerospace was a very good sector for us as well.
You're out of ethanol now?
We are out of ethanol now.
And you are, looking at your top holdings, I'm trying to look at kind of, sector-wise, sort of where you're making your biggest bets. And it looks like you still have a lot of energy and sort of a mishmash. That's what I find most interesting about it, Paul. What is the strategy right now?
Well, we tend to look name by name. So the top 10, some of the names that we're excited about for the coming year are Scientific Games. That's a back office lottery processor. They manage the instant ticket business for many states in the U.S. and also for states in Germany and the Italian government. And that's a 3 to 5 year recurring revenue contract that they operate under. They also have substantial growth that they should see in possibly from new contracts in Asia, but the Italian contract should start to kick in 2007 along with Germany.
So SGMS, a name that you're buying into right now. Another one I believe you're buying into, which is an interesting move, especially given what we're hearing about the consumer, is Burger King and Polo Ralph Lauren. What is the logistics of those choices?
Well, Burger King is a company that was undermanaged as part of a big conglomerate, Diageo, and private equity bought the business, and Burger King came public around June this year. They are increasing revenues by being open more hours, making it more convenient for the consumer. Secondly, improved breakfast menu. And then third, they've introduced a value menu, which at the beginning you'd think would decrease the overall each ticket the consumer would generate per visit, but actually people tend to buy a value meal plus one of the value items, and so the overall ticket goes up. So they're increasing revenues, and then they also have a cost consciousness, trying to, despite being open longer hours, scheduling the labor in a more efficient manner. And they have some new broilers they're putting in that should save some energy costs as well.
Now, Paul, just looking through your top names here, and I know you're talking about Scientific Games and Burger King are two that you're buying right now more of. But your top holdings are Precision Cast Parts, which is already up 53% this year. Polo Ralph Lauren up 41. You got CB Richard Ellis, then you got Corrections Corp. But you go ahead and pick randomly of one of those and give me the rationale.
Corrections Corp is a private prison operator. They lease prison space to states. There's the latest headlines have been in California that the state of California's prisons are 150% of capacity, and they're trying to ship prisoners out of state in order to reduce that dangerous situation.
So are we building more prisons? I mean, overcapacity is a problem, but unless they're actually building it, do these guys benefit?
They do benefit by leasing space to the federal government, to states, and various other entities that need more space.
All right. Well, Paul, thank you very much. Fascinating. And hopefully there are some new names for our viewers. Paul Rasplika there has beaten the S&P for the past 8 years. And as you can see right next to me, what we have is on CNBC.com, essentially just a chart. Well, I guess we're pulling out to it right now. All right, you can see it. And this is the AIM Capital Development Fund compared to the S&P 500. You can see the outperformance there, which is one of many things you can do on the fund section of our website. All right, next on Street Signs, a brand you know, a stock up more than 10% today. Maybe it's time for you to sample a little Japanese-style steak and then find out what the big guys are doing about real estate. We'll ask the CEO of Cushman & Wakefield. The commercial real estate focus continues right here on Street Signs. We're back in a moment.
Today, big jobs, big money. Who really decides how much top executives get paid? One of the world's largest corporations lifts the veil on the mystery. Closing bell today, 4 Eastern.
If your wealth isn't working for you, then neither is your financial advisor. Smith Barney Financial Advisors have on average 16 years of industry experience. We don't sell our own mutual funds, so we can offer independent advice. And only Smith Barney Financial Advisors have direct access to the depth of Citigroup's global resources. Experience, independence, depth. Come to Smith Barney, where wealth works.
There's the week, there's the weekend, and then there's the weekender.
Friday, Saturday, and Sunday, the subscription from the New York Times, I love it.
Like your whole weekend's just started. It's come a little early.
So the deal is you call the 1-800 number and then you get Friday, Saturday, and Sunday for $3.25, which is half off, which is pretty crazy.
So you get the Friday paper and boom, you're right into the weekend.
Saturday. The word alone makes me happy. I love to sort of pull everything out of the Sunday paper.
Travel section.
The magazine.
Weekend review.
The international news.
The book review. I got these really great boots after reading the Sunday style section.
All I did was call the 1-800 number.
I'm not one of those call now people.
Call!
You should call now.
I love to have the New York Times delivered.
Who doesn't like to save money?
Call now because it's a great deal.
That's like having a table of contents for everything in the world.
I mean, how much would you give for that?
The Weekender subscription from the New York Times. Get it now for as low as $3.25 a week. Call 1-800-682-7344.
Who doesn't like to start the weekend a day early?
Invaluable insight from an indisputable genius.
I do this homework for you. I work tirelessly to try to make you mad money.
Mad Money, tonight on CNBC.
Maya, like many people, has too much credit card debt. How about you? Do you have $5, $10, $15, or even $25,000 or more in credit card debt? I'm Todd Cook, founder of 800 Credit Card Debt. We'll help you find a payoff plan you can live with. One that could work with your creditors to eliminate penalties, lower your interest rates, and even reduce what you owe. Call us, because you can pay off your credit cards and still have money left over each month.
Call 1-800-745-1623.
And welcome back to Street Signs. It's that time of the day, 2:30 Eastern. That's when the final trades come in the oil ring. And let's show you what we're seeing. First, well, we want to show you the Dow. Oil is up, but showing you the Dow here because we've seen a turnaround. And as you can see, it was just after Street Signs began. We talked about the Dow being in negative territory for most of the session, which you can see it was. It's turned around, and not just turned around, actually surpassed its intraday record. So maybe something to keep an eye on. A little bit of a fulcrum turnaround there. And crude oil is higher. I mean, really not moving a whole lot here, but we're up 0.2%. So above that 60.45. Headline, though, is the Dow's turnaround, and right now more than 9 points above the record close set, of course, just yesterday when we had a triple-digit gain for the Dow Jones Industrial Average. Well, what is all of this meaning for the bond markets? In particular, Rick Santelli, a trifecta of better-than-expected economic data.
Well, Aaron, you know what it means? It means, viewers, if you haven't refied already, you might have missed the bottom in terms of rates. Things like 5 3/4 for a 15-year or a 30-year under 6%. But these are still very, very competitive rates. Just look back 10 or 15 or 20 years ago to see some of the double-digit refinancings of those years. Now, the big trifecta did indeed push rates up. Looking at intraday 10-year, wow, at the worst levels, 472. Now, if you look at the zoom from a 1 week, 6 month, 1 year, what you'll see is at a 472 would have been a 9-week high yield. At its current 470, should we close here, this would be the highest yield close since the first few days of November, which makes it about an 8-week high yield. Now, here's some trivia that's really interesting. According to the Financial Times, today is a big day for the euro currency because the value of euro paper in circulation now has exceeded that of the U.S. dollar. Now, of course, that includes some of that paper money in vaults in European banks, but no matter how you slice it, a big theme for 07 is going to be the euro and how potentially a lot more use, whether it's Iran or the United Arab Emirates doing conversions, it will be a big topic. And why is that important for you looking at interest rates? Because one of the big factors the last several years that continued to prop up prices and keep rates down was the fact that all these dollars in the hands of foreigners seem to recycle through into the treasury market. 07 will prove to be an interesting year, and if we get more data like this, we might see these notes get a lot closer or above 5%. Aaron, back to you.
Rick Santelli, thank you. Now, Rick, talking about a very interesting year for bonds. For energy markets, 2006 was one of the most volatile in history. All in, oil will end about flat for the year, but that included a surge through the first half, a record, and then a plunge. So how should you bet in 2007? David Kotak, Chief Investment Officer at Cumberland Advisors, has some ideas. And David, I believe it's a pretty simple idea on crude oil. What do I do?
Well, I think you stay long crude oil, you stay long energy. We're overweighted energy, and we believe in it for 2007, Aaron. By the way, I congratulate you. You had Steve Leisman on. You reported the trifecta. You turned the entire market. Good for you.
I don't know if I can take credit for it, but if you'll give it to me, I'll take it for now. But David, how do you have a specific way you play this? So you think go long oil right now. How?
Well, we use exchange-traded funds, and the current position that we like the most is VDE. That's the exchange-traded fund that is the broadest. It has the big guys like Exxon and Chevron, of course, but it's got a lot of stocks in it. It's Vanguard's energy fund. And so you get the play out of merger and acquisition. You get the smaller drillers. You have over 100 stocks in it. So it's a very broad exchange-traded fund. It gives you a vast array of options assembled. You don't have to worry about a single torpedo like an Enron sinking your ship. So that's the one we like.
And that just is a primarily stock-based play, though. You're not actually trying to go long the commodity itself.
That is correct. You own shares through the fund. You own shares very efficiently in over 100 companies.
David, I want to ask you something that I have been curious about, and this is the relationship between natural gas and crude oil. When you look at crude in 2006, we're about flat, let's call it, right?
Yep.
You look at natural gas, we're down about 40%. Is one of them dramatically out of whack?
They're not out of whack in the United States because in the United States, natural gas is 97% local, North America, it's domestic. Crude oil is trading globally. It's a worldwide commodity. A couple more years from now, we'll have liquefied natural gas in enough distribution so those two markets will start to coalesce worldwide. But right now in the U.S., natural gas is a domestic play, and of course we've had all this warm weather, so we haven't gotten the prices we expected out of a cold winter.
All right, David, thanks so much, and Happy New Year.
Happy New Year to you, Aaron.
All right, we'll talk to David often in the new year. David Kotak from Cumberland Advisors. Now, shares of Japanese steakhouse operator Benihana spiking more than 10% today. The stock was upgraded to a strong buy from a buy. Will Hamilton is Vice President of Research at Sanders Morris Harris. He's the one who made the call. Thanks so much for joining us. Well, I'm looking at your report right now. I'm pulling it up. Why so bullish on Benihana? I mean, this has been a stock plagued with problems.
Yes, Aaron, thank you very much first for having me on. But our call this morning on Benihana was based primarily on three primary factors. First, in the short term, we think that there's a good chance that the company will beat expectations for the third quarter. And secondly, we think that the long-term outlook for the company is very favorable. It is a leader in the Asian dining category with three concepts: Benihana, raw sushi, and Haru. And that is one of the fastest growing categories in the restaurant space. And then finally, we like the valuation here with the stock trading at a discount to its peers. And we think that in 2007, the market will reward the stock with a higher multiple as the company continues to deliver on superior same-store sales growth in that year.
All right, so you made your case. Here's the thing, though. When you talk about the number one reason you like the stock, you think they're going to do better than expected in the third quarter. Here's where I'm worried, though. I mean, if I'm thinking about buying on your call, they missed 2 of the past 3 quarters on earnings, right? And then the last quarter, they came out and actually came out with disappointing forecasts for the third quarter. So what makes you confident they're going to not just meet expectations, but exceed them this time?
Well, the previous miss in the second quarter was due to largely short-term issues. They had a couple of delayed openings and some other longer closures with some restaurants. Particularly, there was a unit in Miami that was closed due to a fire. So those were really short-term issues and not really an issue with the long-term outlook for the company.
Do they benefit from, say, Matsui and other athletes, the surge in the popularity of Japanese athletes in this country?
That's potentially. I mean, you're seeing across the country, though, that Asian food is becoming more and more popular with consumers. I mean, sushi now is much more mainstream, and and you're seeing it everywhere. And I think that growth and that appeal to Japanese concepts and Asian concepts in general will continue. And Benihana will benefit from that.
All right. Well, Will, thank you very much. We appreciate it. It was a fun segment, an interesting stock call today to share with you. Will's target is $34 on Benihana. That is a 30% surge from where the stock is right now, including today's game. All right, when we come back on Street Signs, residential housing is in a slump, but what about commercial real estate? It has been powering the economy, holding it up, as you could say. We're going to ask one of the nation's largest property managers, Cushman & Wakefield, the state of the commercial real estate industry. That is next. We'll be back.
– 2006, a record year on Wall Street. And there is only one place where the most trusted names in business news tell you about the biggest stories of the year.
The industrial average into record territory.
CNBC.
The first vaccine for cancer is now FDA approved.
Amarin has sent a letter out to its investors notifying them of its having taken an enormous loss.
One source for the exclusive interviews that move markets.
Shareholders still want answers, Bob.
Yes.
What were you thinking?
One of the most remarkable businesses we've ever seen.
You're not the person that you say you are.
If you wanted to find it.
One location for the insight you need to beat the street.
Investigating what are now scores of companies for this alleged backdating of options.
We want to show you how the markets have been reacting to his commentary. The Dow has gained an additional 61 points, the little Bernanke bounce.
Bill Gates transitioning out of the company.
One network has it all, on the air and online.
An exclusive interview on the all-new CNBC.com. Those comments will surely move the market.
Investors don't seem to know what to do. I don't know what to do.
Good, I do. You came to the right guy.
And the best is yet to come.
New all-time closing high as this year-end rally goes on.
CNBC. First in business worldwide.
Sports sedans have come to be regarded as purely machine. But when design functions as a display of human skill and craftsmanship, rather than simply mechanical precision, the machine can evoke emotion. It can shape how you experience the road. It can go beyond machine. The all-new G is here, and it's from Infiniti. Come see the all-new G, now at the Infiniti Limited Engagement Winter Event.
Where did I park my car? Oh, no.
If you have trouble remembering what you don't write down, now there's an easy way to remember everything. It's called My Lil Reminder, the digital voice recorder that records without tape.
Blue section, row 18.
Just press the button to record.
Milk, juice, butter, and eggs.
Then play back your reminder when it's time. And look, My Lil Reminder even has a built-in LED flashlight. Other digital voice recorders can cost up to $100, but you can get My Lil Reminder with built-in flashlight for only $9.99. Call now, and we'll send you a second one absolutely free. You just pay shipping and handling. That's right, you get 2 My Lil Reminder digital voice recorders with built-in LED flashlights for only $9.99.
To order, have your credit card ready and call 1-800-215-3927. That's 1-800-215-3927. Don't delay. Call now.
Are you one of the millions of people struggling to learn a new language? Well, thanks to our breakthrough software called Rosetta Stone, learning a new language is now incredibly easy and a whole lot faster.
I probably learned more in the first 2 weeks than I have in months of taking formal classes.
Rosetta Stone is so fast and effective, it's used by the U.S. State Department, NASA, the FBI, and top Fortune 500 companies, and is the world's leading language learning software.
It's almost like having your own person there teaching you, your own private tutor who is just very relaxed in your home with you, sitting there teaching you the language.
Rosetta Stone is the fastest way to learn a new language. And to prove it, we'll send you our amazing demo CD absolutely free when you call.
This really is a great program.
I believe that you can learn any language with this program.
So, call now and see for yourself why Rosetta Stone is the fastest way to learn a new language, guaranteed.
Right now on CNBC.com, their beats, their blogs. Go deep. Inside Sports with Darren Ravel. Trade up to the all-new CNBC.com.
It's no secret that the housing market has seen better days, but that's hardly the case when it comes to commercial property. No slump there that we know about. So how long can it last? Let's ask Bruce Mosler, President and CEO of Cushman & Wakefield. Bruce, it's great to have you with us. What is the state of the commercial real estate business right now? I mean, we've heard about it surging all year. Are you in a steady state now, or is it still getting better?
Well, thank you for having me. And we are in a steady state. I think that commercial real estate is doing nothing but appreciating. The office market fundamentals are strong and getting stronger. Rents are rising. It's sort of the opposite of the residential sector, which is seeing a little bit of oversupply. We're actually undersupplied in the office segment.
You said that you're seeing significant rent growth. What does that mean in terms of numbers, percentage rent increases you're able to push through in your big markets, New York and Los Angeles?
Well, we've seen several spikes in the major marketplaces. In New York now, we're regularly seeing in the Class A product buildings rents in excess of $100 per square foot. So having several spikes really means close to 10-15% appreciation, and perhaps more in some buildings.
10 and 15% from where you are now, $100 a square foot?
That's correct.
Wow. And how often are you signing new leases? I mean, are you in the process of signing a bunch right now in New York, for example, that could be $115 a square foot?
Oh, I think so. I think that in the Class A properties, you're seeing rents in some properties that will exceed 120 and 130. Now, those are special properties, but nevertheless, we represent a lot of owners, so we're in the process even as we speak, and will continue to be.
All right. Now, here's the thing, Bruce. If you are able to charge rents of $115 a square foot in parts of Manhattan, and you're talking about rents surging around the country, I have to assume that you are aggressively planning to build more buildings so you can take advantage of the market.
Well, we don't build. Cushman & Wakefield is a service provider, but I would suggest that most market fundamentals, now being in equilibrium, would necessitate some building of speculative property. However, let me point out that one of the things we've done so well over the past 8 or 9 years is lender discipline. That's what kept these markets in fundamentally great shape, and I think we need to continue to be wary of that go forward.
So what you're saying is you do think there's going to be some speculation. Can't avoid it at this point.
I think you can't avoid it, and I think we need to be careful where and when and just how much so that each market remains in equilibrium or close to.
And Bruce, last question. I know you're in other countries around the world, including India and China. Yes, what is outside the U.S., what's the highest square foot that you can charge for your Class A property compared, say, to that 115 you're pushing through in Manhattan?
Well, New York actually, on a worldwide basis, is not the highest rent per square foot city in the world. Tokyo, London, Paris, these are all marketplaces that have substantially higher rents, believe it or not. But I think that you're going to continue to see rent appreciate right around the world. New York, of course, this year was probably the most invested in marketplace around the world, with just about $35 billion being invested in this city this year. So look for New York rents to continue to drive up.
All right, Bruce, thank you so much for joining us. We appreciate it.
Thank you for having me.
And now the closing bell. It is fast approaching, and Melissa Lee is here with a preview of what they have in store today. Hey, Melissa.
Hey there, Aaron. We got a big show coming up at 3 p.m. Eastern Time. We've got another hour for you devoted to all things big money in 07, and today we are tackling several themes. Among them, the outlook for mutual fund flows next year. Plus, we'll talk to one market expert about her favorite tech stock picks for 2007. And the dollar dilemma. Are foreign central banks looking to ditch the U.S. dollar? We'll find out how that could impact your investments. And, of course, take a look at that upper bar there. The Dow is in record territory, so you will want to tune into the closing bell to see if we can actually set yet another record.
And we are keeping a close eye on that. It just turned around. All right, exactly. Melissa Lee going to be monitoring that coming up in just about 12 minutes' time. Up next, though, on Street Signs, everything you think you know about air pollution could be wrong. Find out why. And then you still have one day to save some money before the end of the year. When it comes to your taxes, we'll tell you how to help your own bottom line. Last but not least, on Street Signs.
I wonder who it's for.
Could be anyone.
My favorite color. What a coincidence.
I did ask for something shiny.
It's that time of year again, when you'll find exceptional values on your favorite Lexus vehicles.
Well, I have some things to do inside.
Me too.
The Lexus December to Remember sales event.
Between my two phone bills, it's probably about $60 a month.
About $150.
Probably $100 a month.
With Vonage, you get unlimited calls to anywhere in the U.S. and Canada, and all the cool features you could ever want are included. And it's just $24.99 a month.
Call 1-800-939-4BON and get your first month of Vonage service free. That's a value of $24.99. Vonage, the better way to phone for less.
No other weekly financial publication moves the markets like Barron's. It provides the knowledge, insight, and foresight that allow you to stay one step ahead. Subscribe now and you'll also receive Barron's Online with its daily columns, market analysis, and tools like the Stock Screener and the Stock Grader. Get 13 weeks of Barron's and Barron's Online, all for only $39. Call now toll-free 800-863-3100. That's 800-863-3100.
Today, big jobs, big money. Who really decides how much top executives get paid? One of the world's largest corporations lifts the veil on the mystery. Closing bell today, 4 Eastern.
If you owe the IRS $10,000 or more in back taxes, please listen carefully.
Are you among the tens of thousands of Americans who owe the IRS back taxes? Maybe you're dealing with tax liens, bank levies, or even wage garnishments. The simple fact is most people in your situation simply don't know their options when it comes to settling their tax debt.
We never anticipated this kind of tax debt. We just don't know what to do.
Did you know that new legislation makes it possible for you to settle your IRS tax debt once and for all? You may also qualify for enormous savings. If you're ready to end your tax nightmare, call the number on your screen right now and let Innovative Tax Relief, one of the nation's largest and most experienced tax firms, help you. The experts at Innovative Tax Relief can help you remove liens, levies, or garnishments. And you may even recover lost penalties and interest.
Now our lives are back to normal.
Innovative Tax Relief. Thanks. The call is free, so don't wait. Call right now.
We'll take a look at the Dow, as we told you, turned around here on Street Signs today, present for those watching, and it is up 8 points. Now, that means it'll close at a record if it's higher at all today. The new intraday high, though, was set a few moments ago on Street Signs of 12,525, and we are off of that level right now for the Dow, not quite holding on to it. Well, what if we told you that everything you think you know about air pollution is wrong? Our next guest says that's exactly the case. Joel Schwartz is an adjunct scholar at the National Center for Policy Analysis. He's out with a study that says environmentalists have exaggerated how bad air pollution actually is. And also Ed Hopkins. He's the director of the Sierra Club's Environmental Quality Program. And of course, he will show you there are two sides to every story. Joel, let us begin with you, though, and your numbers. What are the numbers here that show that air pollution simply is not a problem?
Hi, Aaron. Thank you for having me. During the last 25 years, even though we've more than doubled the amount of miles that we drive, and even though we burn about 60% more coal than we did back in 1980, air pollution is way down. For example, ozone, one of the components of smog, days exceeding the federal ozone standard are down about 80% nationwide on average. The average amount of soot in the air is about 40% lower. The amount of carbon monoxide, is down about 74%. Sulfur dioxide down about 63%. So all the pollutants we measure have been going way down, even as the things that we normally associate with pollution have been going up. And yet, most Americans think that air pollution has stayed the same or increased over the last few decades. And the reason for that is that environmental groups and regulators generally exaggerate the amount of pollution in the air. They obscure these positive trends and create the impression.
Joel, hold on a second. Let me bring Ed in here because he's from the Sierra Club. Ed, do you dispute Joel's numbers about air pollution itself?
Well, thanks, Aaron, for having me on the show. I agree absolutely that air pollution has declined dramatically since the Clean Air Act was passed back in 1970. It's been one of the most successful public health and environmental laws that we've had on the books. We've had a tremendous amount of progress on cleaning up the air. The problem is that even though we've had that progress, 150 million Americans still live in counties where the air is not safe to breathe because of high levels of soot or smog. So we need to continue to make progress, the kind the Clean Air Act has shown is possible, and bring those levels down further.
Joel, what's your point? Is your point to get rid of the Clean Air Act? You're saying it's worked, so get rid of it?
Well, I think there's a few points I want to make. First, I want to correct a couple of misconceptions that Ed just created, which I think are actually examples of how environmentalists do this. First of all, air pollution was declining before the Clean Air Act. Pittsburgh, the smokiest city in America back in the early 1900s, reduced its particulate level 75% between the early 1900s and 1970 when the Clean Air Act was passed. Los Angeles, the highest ozone smog area of the country, started reducing ozone in the mid-1950s, shortly after the problem was created by rapid population growth and driving. So the idea that the Clean Air Act was necessary to reduce air pollution is simply wrong. People were reducing air pollution.
I just had the CEO of Duke Energy on last week, though, and he said when he's talking about carbon dioxide emissions, which obviously isn't directly air pollution, but when he's talking about climate change, he's begging for the government to come in and regulate things. So it's not as if corporate executives are against regulation here. I mean, what's the beef with the Clean Air Act?
Well, I think the main beef with the Clean Air Act is not that air pollution hasn't declined. It has, just as it was declining before the Clean Air Act. But with the Clean Air Act, we've had a lot more collateral damage under the federal system, because the system is very process-focused. For example, it's more important for states to have a plan demonstrating that they're going to comply with the Clean Air Act on some future date than to actually progress towards compliance, because states can be sanctioned only for not having an approved federal plan, but they can't be sanctioned for not actually reducing air pollution.
Ed,
if I could just make one or two more points.
Okay, one more point, Joel, then I want to make sure we get Ed in again.
And then we have clean air laws hijacked for other purposes. So environmentalists have an anti-car, anti-suburb agenda, and even though technology has been reducing air pollution without the need to stop driving.
Because I don't want to get into the alleged agendas here. But Ed, let me ask you, from an environmentalist perspective, separate from what Joel just said, and I'm sure you want to respond to it, but what I want to know here is, what do you think is a bigger problem for the United States right now, air pollution or carbon dioxide emissions?
Well, the bigger problem is both. We have both continuing problems with large areas of the United States not meeting Clean Air Act health standards, and the United States remains the biggest emitter of carbon dioxide in the world. We have to solve both of those problems, and we think the Clean Air Act is the best vehicle to get there. It's shown over the last 35 years that even as our population has grown, even as our economy has grown, we have the know-how to bring down air pollution, and we could do that with carbon dioxide as well.
All right, well, Joel and Ed, thank you very much. A passionate debate. I know that you're never going to perhaps come to agreement, but thanks for sharing your point of view with us. And just a note for viewers, I want to make sure you all know, we did have the U.S. government for the first time ever citing global warming as a reason for suggesting that polar bears be added to the endangered species list. That occurred earlier this week. Street Science is back in a moment.
Listen to CNBC in your car on Sirius Satellite Radio, the best radio on radio.
Look closely at how dramatically these wrinkles diminish.
I haven't seen anything like it since Botox.
This is what my patients want. Dramatic results you can see immediately on the eyes, the lips, even the cheeks.
And it's available without a prescription.
Genisphere's patented microscopic carriers called Q-zomes nestle beneath each wrinkle. Then, absorbing your body's natural moisture, they expand and gently lift wrinkles from beneath. Genisphere is already selling for $99. But if you call right now, you'll find out how to get a month's supply of Genisphere absolutely free.
The results are quite dramatic. You see a difference with the very first application.
Genisphere works because it's backed by real science with real results.
Please do not delay. Introductory free supplies are limited. Call now for rush delivery.
Call 1-800-576-8510. That's 1-800-576-8510. Learn how to get a 1-month supply of Genisphere at 1-800-576-8510.
When it comes to making the important decisions in your life, like money or your health, it helps to hear what others think. And it might help you to know that the AARP Medicare RX plan has already covered over 40 million prescriptions for members, saving them over $3 billion. The 2007 AARP Medicare RX plan's drug list includes all brand name drugs or their generic equivalent covered by Medicare Part D. You can choose a plan with no annual deductible, and there's no surprise when it comes to your copay either. You can expect affordable, flat copayments. You may even qualify for extra help if you're on a limited income. If you're in a different plan or haven't enrolled yet, now's the time for the AARP Medicare RX plans, exclusively endorsed by AARP. Call now for your free information kit, because annual enrollment for 2007 runs from November 15th to December 31st of this year.
To order, call 1-800-551-2639. Don't delay. Call now.
The clock is ticking. We are 25 hours from the end of trading for 2006, and our next guest is here to give you 3 last-minute ideas for your cash before the next year. One of them includes running out and buying that special pair of Gucci glasses you've had your eye on. Ellen McGirt, senior writer with Fortune magazine. Ellen, how does buying Gucci sunglasses save my tax bill?
I know it seems counterintuitive, but I can make it work. I can make the numbers work. It's the flexible spending account, that wonderful handy-dandy tax tip that lets you sock away pre-tax dollars for healthcare, any healthcare expenses not covered by your plan. The wonderful deadline has been extended till March 15th, but most companies that offer them have not extended the deadline, citing administration hassles. So most of us would be surprised to find that we're leaving this wonderful tax money on the table at the end of the year. So stock up on things like sunglasses or contact lens solutions, you know, call up your shrink for an emergency session, cold medicine, whatever it is that you need, and don't leave that money on the table.
All right, so take advantage of those accounts. Now, the other thing, really, we only have 24 hours literally of trading here. You're saying you can still sell stocks that have stunk.
They have, and I know it seems impossible to imagine with the down record territory, but we probably all have some clunkers in our taxable accounts, and you can sell those at a loss to offset all those wonderful capital gains. And it is such a wonderful way to clear out the accounts for next year, but also to harvest real assets.
Up to $3,000, right?
That's exactly right. And if you've got more, you can carry them over for next year. So pull out your old tax returns. You may have got losses from previous years that you can use for this year.
Ellen, 15 seconds. The other thing is to write some checks quickly to charity.
You can open up a donor-advised fund, call Fidelity, Schwab, all the big guys. They let you get the deduction now, and then you can give the money away at your leisure.
Ellen, thank you. Ellen McGirt always has great ideas. We love to bring them to you. And thanks so much to all of you for watching Street Signs. We told you the Dow has turned around, so the question is, will we pass the intraday high? Can we hold it and end at a record? You will find out if you watch the closing bell today with Melissa Lee.